Hi there, traders. This is Brad Gilbert with today's trading action. All right, now there's plenty to go through and there's plenty going on. We've got a couple of live trading sessions today on the UK inflation rate, and then following up some 6.5 hours later, the US inflation numbers, right? Two big numbers, two big currencies, and there's plenty to play for. Now, just having a look at what has been going on, the NASDAQ had a huge day, right? Massively up 464, 2.5%. Now, just at the start of the Asian session, we are seeing, some of those equities just roll back a touch, but we're not seeing the same reflection here across the board on the currencies, right? It's like everything's going up. Now, that doesn't really make sense on a lot of different levels, but that's what we're sort of seeing just at the moment. And if I just scroll down, there's, safe havens. Well, they're Swiss in the yen. They're selling Swiss in the yen, and they're buying sort of Bitcoin and some of the metals. Not uniform price action across the risk on risk off pairs. Commodities, well, you know what? They're all doing pretty good, right? And just down the bottom here, one of the key aspects: US inflation numbers out of the treasuries, right? A little bit lower, right? Lower dollar means a higher euro, sterling, Aussie, Kiwi. Now, there's a few things coming out here, right? And if I just sort of show you the calendar first, I have put out a trade alert, which you can find here on the support and resistance page, right? Potential chance here for the RBNZ to hit the market with a surprise cut. Now, let me just come into that. The Kiwi cash rate, okay, 5.5% is the forecast. That means no change of interest rates, but there is a slight in the range of the forecast, there is a slight chance for a cut. But if you look at the interest rate derivatives here, right, they've got a 77% chance of a cut, right? That mismatch to me is something that we could potentially take advantage of, and you'll find that in that trade alert. But coming into the big numbers, right, we've got UK CPI numbers coming out. The year-on-year number, to me, that's the month-on-month. And you got the core numbers. Now, just work out which one's which. It's the CPI number, which is the major focus, right? So, of course, you'll be looking at both numbers, but that's where we are. UK CPI, 2.3% is the forecast. The 2 to 2.7%. Now, the previous number was at 2%. So they're expecting a slightly stronger number. But should that, come in outside that range, you're going to see a significant move. Now this is, a good few hours before, like 6 or 7 hours before the US CPI numbers come out, right? And this is the main game, right? So depending on what's happened with sterling, we may see an opposite move in sterling or a bigger move one way. And what I mean by that is if we got weaker UK CPI and then stronger US CPI, well, you're going to see sterling fall out of bed, or vice versa, go through the roof. And that's what we're sort of set up for. I'll show you the charts in just a second, but just looking at the CPI here, right? On the US CPI numbers, the forecast is for 3%. The minimum max range, 2.9 to 3.1, right? So the numbers, they're expecting just the same as the previous number, but the, this is, the Fed have been talking about getting inflation back to that 2 to 3% sort of range. I think today, if we see a number, let me just change the color of the pen there, below 2.9%, we'll see the dollar really sort of give up some huge gains. And that's where I think we've got to be focusing our attention, because if I just get up the charts, right, and just looking at on the hourly charts, you can see we had some weaker PPI numbers yesterday. Dollar Swiss, it hasn't really rolled over, but it's just drifted through that trend line, as has dollar yen. The higher oil prices is pushing dollar CAD to the downside, and we are starting to see euro showing some signs of life. Same with sterling, Aussie, and the Kiwi, right? And a lot of these pairs, if I just come over here, we've got like a double top here on euro, which is ready to be blasted through the top side, especially through 110 the figure. That's got to be a target if we get weaker US CPI numbers. Okay. And once again, weaker CPI at the moment, we've got a risk on environment. So you expect euro sterling, Aussie, and Kiwi all to go up on weaker US numbers, right? If we got significantly stronger numbers, which I can't see, well, then you'd see a slight pullback in these numbers, but the best chance is for weaker numbers. That's what I'm looking for. And we should see dollar Swiss tank and dollar yen tank for that as well. I mean, dollar CAD will go along for the ride, but just keep an eye on oil. If it keeps rallying, you're going to see dollar CAD to the downside. So really, really good trading opportunities set up perfectly for weaker US numbers. Now, we've been waiting for this for some time, right? And this is where it will go very quickly into changing. And what I mean by that is we've been sitting here sort of talking about it for like 9 months or 8 months. Now we're going to potentially see it, and we could see a sharp move here on a lot of these euro, sterling, Aussie, Kiwi. We should see the dollar pairs continue to the downside, the dollar index, dollar Swiss, dollar yen, and dollar CAD for that matter. Now, just be aware, right? Sterling, we have got CPI numbers coming out in sterling. So that's what I was saying. We could get a double whammy move here in sterling. We get stronger UK inflation and weaker US data. We're going to get a double thruster, if you want to call it that. And same for the downside. If we get weaker UK data and stronger US inflation numbers, you're going to get that double thruster to the downside. So keep an eye on sterling when you are looking at your charts. Lots of execution levels around on your hourly charts, right? So just have a look at that. Not so much sterling topside, but definitely if you're looking for it, euro, Aussie, and Kiwi topside. Once again, don't forget, we've got Kiwi today. We could see a surprise rate cut. That'll mess up that trading opportunity. But if there's no rate cut, well, Kiwi topside is definitely on the cards. All right, so there's plenty to play for, guys. As I was saying, like there's lots going on. It's a good day for trading. If I look at those live trading sessions, traders who have got access in the live trading and coaching, you can jump on those sessions. You should already have the invites in your emails. Let us know if you don't. We can sort that out. But really, lots to play for. And if you look across the board, we have had a lot of instruments here heading up towards the support and resistance levels. They have cooled their jets for the moment. But keep an eye on this as you go through, particularly the North American session and obviously also the UK session, because we might start to see some things line up here with sterling, right? And then you can either keep an eye on the signal there and look for those levels. But big day, huge opportunities, lots going on with the webinars and everything else. So make sure you tune in. And we'll see how we make out. And last but not least, once again, just check out that trade alert. I have posted it on the support and resistance page. You can click into that and get a lot more detail around that Kiwi trading opportunity, which comes out in about 50 minutes. All right. I'm preparing for it. It's not that I overly expect it, but I'm preparing for a selling opportunity in the Kiwi, right? It's on the cards. And the market looks like it doesn't expect it. Good luck, guys. All the best. Cheerio.